REITs should be in a better position this year than some of their competitors to make acquisition and really benefit from accretive growth. So 2025, I think, could be a very promising year for REITs, and investors should take note.
Hello and welcome to the REIT Report. I'm your host, Sarah Borkson-Keto. I'm pleased to be joined today by my colleague, Abby McCarthy, Nareit's Senior Vice President for Investment Affairs. Abby is here to share her thoughts on themes and trends in REIT investing today and what to look for in 2025. Abby, welcome to the podcast.
Thank you, Sarah.
So, Abby, we're speaking in January, a month where many investors might be looking ahead and considering how to make their allocations for the year. If they haven't already done so, why should they be including real estate and specifically REITs in their calculations?
Well, Sarah, REITs, real estate in general, just offers investors a lot of important investment attributes for their overall investment portfolio, including access to a real asset that produces income and also an asset that can provide inflation protection. Specifically, though, REITs offer investors a low cost, effective, and liquid means of investing in commercial real estate. As real estate stocks, they provide meaningful benefits to investment portfolios, which does include competitive long term total returns, strong portfolio diversification, and stable dividend income. Additionally, REITs provide investors with access to 13 different property sectors, and they've really been on the forefront of investing in new property sectors, which really are housing the modern economy or the digital economy, such as data centers, telecommunications companies, additionally, healthcare and self storage. So that really provides investors not only with the portfolio diversification they get from the various investment attributes of REITs, but it also gives them sector diversification as well.
Great. And for those investors who are working with financial advisors, what trends are you seeing in terms of how those financial advisors are educating their clients on the benefits of REITs and encouraging them to invest in the sector?
Sure. Well, in 2024, we actually conducted a market research study on the use of REITs by financial advisors. And the results of the study were encouraging. It did find that a sizable majority of financial advisors, 78%, recommend REITs to their clients. And so when we probed into that and asked why, some of the key advantages advisors cite in why they recommend REITs to their clients are the dividend income that REITs provide, those portfolio diversification opportunities that come in the form of strong risk adjusted returns and liquidity.
Abby, what about allocation levels to REITs? What is the latest research telling you about the optimal level investors should aim for in a well diversified portfolio?
Sure. So, a recent Morningstar analysis found that the optimal allocation to REITs really ranges from about 4% to 20% across a range of life stages for investors. So, for example, investors with a 45 to 25-year time horizon who are in their working years, the optimal allocation to REITs is around 20%. Now, that allocation does gradually decline over time to around 11% in the later years of a person's career. And then in for investors that are actually at retirement or well into retirement, the allocation goes down to about 4%.
And that leads into my next question, which is, are there particular reasons why REITs might be a good investment fit for younger investors?
So, REITs actually for younger investors have a lot of benefits. I think what's important to note here is that if a young investor chooses to invest in REITs in their retirement accounts over time, they are able to really get the full benefit of a REIT's total return. As I mentioned before, REITs have a strong dividend component. They're required to pay out 90% of their taxable income in the form of dividends to investors. So, for young investors who are investing in a 401k or a 403b, they can really take advantage of that compounding, that total return that will give them additional return benefits over a long period of time.
And for older investors, meanwhile, what benefits do REITs offer in terms of reliable, steady retirement income?
Again, as I mentioned just a moment ago, the requirement that REITs have to pay out 90% of their taxable income in the form of the dividend to their shareholders really for people who are actually at retirement or well within retirement, REITs really can provide a reliable income stream. And in terms of the actual data, in 2024, the dividend yield for REITs was 4.3% relative to the S&P 500 yield of 1.2%. So you can see that REITs really provide that additional income that once an investor is in their retirement years and is in need of additional income streams can be very beneficial.
What are some ways for new investors or even seasoned investors to become familiar with REITs and their investment potential?
There are a lot of resources out there, but I would highly encourage any investor or financial advisor interested in becoming familiar with REITs to really go to Nareit's website, REIT.com. And specifically, we have a whole section dedicated to understanding REITs and their role in portfolios in a publication that we produce annually called the REIT Quick Facts Guide. I would also strongly recommend that investors look at the various market commentaries that are produced by Nareit's research team that really keep people abreast of the current trends and performance statistics that are relevant to the REIT industry. And last, REIT.com also provides a great section where people can research individual REITs and then also get information on the various actively traded mutual funds, ETFs for the REIT industry.
And any closing thoughts on investing in REITs in 2025 and what investors of all sorts should be looking for this year?
I think the most important theme of 2025 will be that REITs really have an advantage in terms of that they have very disciplined balance sheets and low debt costs, which will likely give them a competitive edge over their other investment counterparts, especially in the real estate space. Those investors who have higher debt loads and costs and less access to the capital markets. And really, what this means is that as property transactions increase, REITs should be in a better position this year than some of their competitors to make acquisitions and really benefit from accretive growth. So 2025, I think, could be a very promising year for REITs, and investors should take note.
Excellent, Abby. Thank you so much for your time today.
Thank you, Sarah.
And to our listeners, if you enjoyed this episode of the REIT Report, please subscribe or leave a review on your favorite podcast platform.